After Harmony 1 reaches new all-time highs, we have seen an expected pullback. I can see why this has worried many in the space, so in this video we're going to dive down into the charts and take a look at what is going on here with Harmony 1. As we get into this video, if you do find this useful and informative, hit that like button, I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap that bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Right, with that said, done out of the way, let's dive down into the charts and actually take a look at what's going on here with Harmony 1. So we're going to spend some time just taking a look at this weekly chart. This weekly chart really is your cheat sheet. So if you ever are concerned over what is going on with Harmony 1, then it's actually good to zoom right out to the weekly, because this gives you a good idea of the overall structure and how things are currently performing. As we can see, there are 5 impulsive waves to the upside. Okay, this is pretty much the shape of the entire bull run for Harmony 1. This kind of started back in March of 2020, and wave 3 peaked up in March of 2021, right? So just waves 1, 2, and 3, we had seen 18,905% in gains. Now, obviously, when we take into consideration the fact that we've now started wave 5, we can take hold of our price expectation here. Let me just move that out of the way for a second. We can see that if I put this up on top of our recent high candle this week, it's 32,246% in 595 days. Okay, so again, this is a pretty good kind of way to kind of see the kind of momentum that Harmony 1 has had, and we are not yet finished. We've still got quite a lot of more in the tank. So obviously that first 385 days for Harmony 1 of 18,000%. That is, you compare it to Bitcoin, where Bitcoin only had 1,600%, Ethereum 5,000%. Obviously, you can see that it has been an incredibly good performer for the portfolio. Obviously, after those 385 days and 18,905% in gains, we did see the pullback for Wave 4. Now, this is where basically lots of people in the space who maybe were inexperienced or just didn't really understand what was going on were calling this a bear market, ultimately causing lots of fear in the space, compounding the issue, but also making the price actually plummet a little bit further. This was actually a fantastic opportunity for those people who saw what was coming, or were even potentially paying attention to the channel here as we started to scope out this buy zone at the bottom of wave 4, ahead of where we're going next up to the upside, and talking about moving Harmony 1 up to 80 cents. So again, some fantastic opportunities to get back into Harmony 1 at the lower end of wave 4 here. So again, if you're a trader and you could see all this coming, you could definitely see that we're pushing up to wave 3, looking for the overbought area on the stochastic RSI, looking for other indications of a pullback. Maybe you missed the initial kind of pullback but sold on the bounce. It's a fantastic way to kind of get yourselves into a pretty good position on a trade, down to the lower end, where again we're tracking this trend line from early February 2020. We touched on this in August of 2020 as a resistance line. We broke it, confirmed there is that trend line as a support line. So again, this is a nice area to be monitoring, because not only are we into the really low areas of wave 4 where you would expect it to kind of retrace to, but also it was on our trend line. This basically triggered that big push to the upside. Okay, and this was then also given a fantastic opportunity even after the lows of wave 4. Once confidence came back into the market, we had September, right? And we had the cup and handle pattern forming here. We just needed to form the handle. And again, this is what September did for us. So they're basically confirming that bullish sentiment and that bullish move to the upside. We were gifted another opportunity in September to basically be able to take a good position in Harmony ahead of this surge to complete the cup and handle pattern. And again, we'll get into that in a moment on the daily chart. But basically, the structure of this weekly is what I'm trying to get at, has been very, very good. You can see that we aren't really deviating too far away from this huge, humongous kind of push to the upside. And of course, we have got a Fibonacci retracement tool on here as well that takes into consideration the trends that we've actually seen so far, right? The pullback for wave 2, the surge to the upside with wave 3, the pullback for 4. Where does that mean that we are likely to go for wave 5? Well, taking into consideration the trends of wave 2, wave 3 and wave 4, we can see Harmony 1 moving up to a theoretical top of 96.5 cent. Now that is based on the trends that we've seen in the bull run so far. So basically, what's currently been going on with Harmony has led to these particular trends. These trends lead to the 5th wave topping out at 96.5 cent. What's not inside the data, though, is anything new that might be coming to the ecosystem, new things that are building, new things that increase the adoption, increase the transactional volume. And this could actually help push us above 96.5 cent. Okay, so if nothing fundamentally changes between now and the end of the bull run, then ultimately we'll see 96.5 cent. And that's going to be the top end, right? So that's my optimistic kind of price target for Harmony. If we do see more fundamental changes that actually bring more adoption to the blockchain, then we could potentially go past 96.5. But based on the technicals that we have at the moment, we see 96.5 cent as the top. So when we take a look at the structure of our weekly chart, and we can see that we're tracking so nicely against these impulsive moves to the upside, I really am not concerned over these kind of pullbacks that we see on the daily or even on the hourly chart, right? Because they're micro movements that do not actually deviate away from the bigger picture on where we are going. So if we're ever in doubt and we're ever kind of worried about what's going on with Harmony, let's just zoom out, pay attention to that weekly, make sure that we're not deviating away from the structure. You have good targets that we're aiming towards. And as you know, guys, we came very close to the 1.618 on this area here at 39.7 cent. We actually take a look at the high that we had, which was 38 cent. So we're just short of our 1.618 on this target of the trend-based fib. Okay, so really good progress has been made so far, but obviously nothing moves up in straight lines, as we often talk about, and natural corrections are needed. Okay, so knowing that the structure of the weekly is looking very, very good and there's nothing wrong with our structure, let's actually take this down to the next level. Let's jump into our daily. This is where we can actually start to see what's been going on in a little bit more detail over the course of a few days, right? So obviously we had the cup and handle pattern, right? And on this daily chart as well, we also have a different fib. So let's start with the Fibonacci to start with. If I just zoom on out here, and this particular Fibonacci runs from the high that we had up in March and the low that we had down here in June. Okay, just testing our trend line, as you can see. Now, this actually shows us a conservative 4.236 extension of 80 cent. Okay, so rather than going for 96.5, we can say, okay, let's make sure that we get in late and we lock in profits and get out early. Okay, so if we have that kind of ethos and be more conservative about our price expectation, but also safer in the space, not trying to eke every last dime out of the bull run, but be happy with the profits that you've generated, then 80 cent is a nice area to be considering making your exit. And again, we actually did a whole strategy for the members on this about talking about the 1.618, the 2.618, the 3.618, and the 4.236. Locking in certain percentages here are going to be quite key to getting out with a profit in Harmony 1, and then using the bear market to really build a significant position ahead of the next bull run, because ultimately that is where your money is made. Your money is made in the bear market, not the bull run. The bull run is all about managing expectations and emotions, right? Building the positions, and that's something to magnify and multiply your portfolio. That is done in the bear market, right? And a lot of people misunderstand this. They get in to projects whilst there's green candles, whilst the market is pumping really rapidly to the upside. And this is unfortunately where a lot of retail investors will get absolutely wrecked. Now, obviously, I'm not a financial advisor. Chris is not a financial advisor. So it's important that you do your own research. And a part of that research might be loading up the charts on TradingView. It's completely free. Sign up, get a free account with TradingView, and mess around with the charts. Copy what I'm doing here. Start to understand what's going on there. Maybe you'll jump over to advice.io, sign up there. There's a link in the description below. Again, completely free to use, and you'll understand what's going on with your cryptocurrencies in a little bit more detail. So advice.io, they use artificial intelligence and machine learning to help us understand the underlying value of cryptocurrencies. And here we have Harmony 1 B1 rating, right? So it's a relatively neutral position just below the top tier of A rated, right? So as we come down, we know that we haven't dropped down any ratings in the last 24 hours, but the fear and greed index has increased. It's got dropped down into the C3 rating. So there's extreme fear in the market for Harmony 1 right now. And again, this is just because we've seen that pullback, right? People were potentially getting into Harmony at 38 cent, chasing those green candles, only to see us pull down to 33 cent, okay? And again, that causes unnecessary amount of fear, but also means that they're going to be potentially selling at a loss, right? People now are willing to sell Harmony rather than buy it. So the sentiment isn't quite aligned to where you want to push the price to the upside. With that being said, though, that's also where there's an opportunity. And because we also have a Sharpe ratio, the Sharpe ratio is an A2 rating. So again, that's right up there at the top tier of ratings. The Sharpe ratio itself represents your risk-reward ratio, and this is indicating to us that the rewards outweigh the risks, and therefore exposure to Harmony One right now might be a good idea. And again, this is something that we've been talking about for a while, pretty much since August, right? Even during that opportunity of September where we had the pullback, right? That was your last opportunity to really get into a good solid position before riding nicely up to where we got to a couple days ago. So again, this is a nice way to kind of analyze whether or not this is fear that you want to buy or fear that you want to kind of let ride. And right now, this is actually saying there's fear in the market that you might want to accumulate. That being said, obviously, manage those expectations. I'm not a financial advisor. Do your own research. You look at advice, understand the data, and make your own decisions. When we come down, we have the ROI, the profitability. This is an A1. Again, obviously seriously outperforming Bitcoin and Ethereum. Harmony One obviously has an A1 rated profitability, the best rating that you can get. It's been performing incredibly well. It's going to continue to perform really well as it heads out towards 96.5 cent. Now, we have got moving averages here of an A2 rating. So again, the 10, 50, 100-day averages looking pretty good. And the AMI-HAD ratio representing your liquidity for Harmony One. Buying and selling Harmony, not a problem with an A2 rating. So the only thing that's wrong with our underlying value and our underlying data right now is the unnecessary amount of fear in the space. You cannot move up in straight lines. You do have to have natural corrections. That is what you've seen. You've seen profits get taken off the table. And now actually we're nice and low on that fear and greed index with extreme fear. The Sharpe ratio is still looking pretty good, well above the 50-day average. And I think things are going to get interesting in the at least in the next couple of days. So when we jump back to the chart, we obviously have a good fib. We know where that's going. We have the cup and handle that targeted out in 33 to 34 cent. Again, that 33 cent area was our 1.618 based on the high of 3 and the low of 4. Okay, so based on that high of 3 and the low of 4, 33 to 34 cent was the target of our cup and handle. We actually overextended there, which is usually what you find, and then we pull back trying to find support. And what we're trying to do is basically find support on 33 cent, and I'll get into that in a moment. So obviously, as we talk about moving up, 51 cent is the next kind of target that we have, really. There's no real patterns to kind of say there's a cup and handle really targeting out those areas, but ultimately, I think do we want to be expecting some volatility? The market is a little bit unstable right now, and specifically until Bitcoin gets above $63,000. I think it's a bit unsure what's going on there. But ultimately, the daily chart's looking very good, right? We have a stochastic that's now correcting down from an overbought area. We're midway through. Again, this is an area that we can obviously get a bounce from, right? We can see that we saw this previously. As we kind of passed our cup and handle area here. So the daily chart's looking actually quite interesting. So let's jump down into those micro movements. Let's get into the hourly view, right? So obviously this is what we were analyzing, the triangular wedge, the Elliott waves triangle just down here. Okay, this is something that we were tracking, and then obviously we've got the break to the upside. The impulsive moves is what we're looking for, right? So basically we've had wave 1, wave 2, wave 3, wave 4, which is the pullback, and now we're trying to track for this wave 5, but obviously there's a little bit of volatility here, unable to kind of keep things moving nicely. So we actually break this down in a little bit of detail, right? So we're basically on support of 33 cent, right? There's also a support level just below there at 31.7, and again, this is an area of previous resistance, and basically what we're trying to do now is actually turn this into support. But I think ultimately, with the amount of fear that's in the space right now, that we should expect to actually pull back down towards our 31 cent and 31.7 cent area. Okay, looking that we're testing this support level right now, but we are up here on the close to the overbought area, right? So we want to lower our stochastic. As we said earlier, people are more likely to sell than buy, but the volumes have dropped, which is good to see. So if we can actually just pull down a little bit, come down towards our 31 cent, and hopefully then ride that to the upside, lowering our stochastic and then taking advantage of that space again. Ultimately, we are still trying to track higher. Obviously, we need to complete wave 5 and this impulsive move to the upside. Obviously, we started to see a good traction back up here again. Now, my main concern here is that we actually lose this impulsive move altogether. And what we mean by that is we're tracking kind of these kind of ABC corrections, right? We had an ABC correction here, and then obviously we were looking for an impulsive move up to the upside, but we haven't seen that, because what we've actually got so far is basically this move. We have 1, 2, and we're looking to track for 3, and then maybe a 4, then a 5, right? So basically, this is the kind of thing that we're trying to find inside our 5th impulsive wave, okay? After an ABC corrections. But what we're actually starting to see here might be something different altogether. This is because we are looking to pull back. I anticipate that we're going to pull back lower than wave 2, meaning that we haven't actually found the bottom of our wave 2 just yet. But the other thing that is concerning me here is actually we might be a part of a much bigger ABC, as in we have A here, B down here, A down here, B up here, followed by a C potentially bringing us down towards our 26 cent area. Okay, now that as an ABC correction could be something that we could also see ahead of then spiking up to the next level. And again, this wouldn't be unusual. The main thing that we want to make sure that it doesn't happen is that we do not cross this wave 1 area of 26.3. Okay, so that's the area that we're trying to stay above. And it might be that, we don't actually drop down that low. We actually find support at approximately 27. And a half cent or something like that. This is a possibility. What we want to do is actually go higher than this wave B high. And I'm going to just quickly mark that up on the chart. Let me just grab this. Grab a horizontal ray just here. What we're really trying to do is basically push above this 37.6 cent area. If we do that, then that's invalidated, and actually we are looking pretty good for the upside, and there's not this larger ABC correction in play. Okay, and obviously the other things that are going on here that could also be a possibility are a bunch of ABC corrections, both to the upside and to the downside. ABC here, and also we're looking for a potential A, B, and C here that maybe only brings us down to this low area. And then what we're tracking here is a potential, like we saw previously with this Elliott wave triangle, is a bunch of ABCs and getting us into a tighter wedge ahead of an explosion to the upside. Now, this is quite a common move for wave 4. Okay, so when we have a wave 4 impulsive move, so we have these impulsive 5 moves to the upside, and we have the 4th wave correction, you do tend to find that this is where you have these Elliott wave triangles, and you'll find actually these things actually get real tight and then they explode up into the upside in a really big way for wave 5. So again, there's lots of possibilities here at the moment. It's too soon to say for sure which ones we're going to definitely see on this journey to the upside, but we want to be monitoring several different key areas really, and on this journey to that upside, right? So as I said earlier, the weekly chart shows us good structure, good motion to the upside. But what we're really trying to do here is make sure that we are tracking nicely for our daily and of course our hourly charts, right? And what we're trying to do is basically analyze whether or not there's some opportunities to do some trading in here, and also prepare ourselves mentally for what might happen next, right? So expecting volatility is definitely one scenario like we saw previously. So we saw this down here, we pushed up, we're into wave 4, and again, this is where you see these triangles usually, and again, this could then be the break that you need to see us push up again into new all-time highs. But until we get through the next little stage to see exactly what's going on, it's going to be really hard to say for sure whether or not we are in a triangle like this, or whether or not we're in a bigger ABC. So one thing is for certain, over the next couple of days, we're going to have this kind of mapped out for us, and we'll know exactly where things are going. But for now, for me, I'm just hodling. And of course, there's going to be opportunities if we do find ourselves in oversold areas as we approach down towards our 30-cent support line. This is going to potentially be a really good key area for us to basically, find a good buying opportunity, ride this up maybe to 36 cent before pulling back down significantly into these lower areas again. So make sure that we're aware of it. I'll keep everyone up to date. So do make sure you're subscribed if you're not subscribed. Do make sure you join us on Discord as well. We're posting a lot of content there. And again, we'll keep everyone up to date as to things as they progress. Guys, I'm going to leave the video there, but hopefully you have found this useful and informative. If you have, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap that bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.